Hi, Tom,
Hi,
Adam.
Ellen.
How
How
are
you
you
doing?
both?
Yeah, good, thank you. How are you?
Yeah, good, very good. Thanks for joining me.
Thank you for having us.
Good. So, quick introduction. So, I'm Ellen from Avocado Property in Ascot. Recently launched a business there with my business partner Sanjay. Obviously, Tom, we used to work together for quite a while, but why don't you tell us kind of who you are and what your current situ is?
Thanks. So I've been a mortgage advisor for 10 years. I've worked at two of the largest brokerages in the country. I worked with you at a large local agent for the last 6 years, where we tried to do our best to get as many mortgages through as possible. And now we've set up Partners Financial Services to hopefully add another string to our bow and show customers what we can do.
Nice.
Sure.
Yeah.
So, bit from me. So, yeah, obviously, Adam Davitt. I've been in the industry, financial services, for over 10 years now. Mortgages specifically since February 2013. Really similar journey to Tom. So, started off large corporate firm, kind of trained there, cut my teeth there. Did 2 years as an advisor, and then we moved to a kind of smaller company on a network. I did another couple of years mortgage advising, then slowly started to move more and more into management. So, managing advisors. That quickly moved to managing teams. That moved to managing departments, kind of seeing little bits of everything. So recruiting people, managing accounts, all sorts. And then, yeah, as Tom said, this idea became quite a real concept a few months ago of starting up our own business and doing it for ourselves with the three of us. Only the two of us are here today.
Yeah, of course. No, I love that. I love the name as well. Partners. Kind of does what it says on the tin, I guess, really. Partnering with people along the journey.
Yeah, it was a big part of our business that we wanted to be sort of more than a broker. It's such a big lifetime experience purchasing a property, and we wanted not just to be someone that's there in the background, but sort of a big step in every part of the journey. So yeah, that's where the name came from.
Exactly. Yeah. It's got that connotation, isn't it? Of you've got this journey for consumers, which is just so busy. You start, you meet loads of agents, you meet loads of properties. You speak to loads of people, from your advisor to your case handler to your insurance advisor to your solicitor. And we just wanted that kind of wrap your arm around name to say, we'll partner you with it, we'll drag you along and we'll help you every step of the way. And yeah, hopefully that's what we're about.
Good. Love that. Very similar ethos to us. So yeah, the timing of everything just worked out quite well. Well, I guess one of the big things that has been on everyone's lips for a while is all about 95% mortgages. And Tom, you and I previously doing just new builds wasn't really something that we were able to get involved in. So were you guys seeing a lot of people taking advantage of the 95% rates?
It's great to see them back, first and foremost, after the difficulties 12 months ago, when you have to get up at 8 a.m. to key a HSBC 90% application, and then by 8:05 all the rates were gone, and that was it, and you have some very disappointed customers. So it's a pleasure to see 90 and 95% back and being so prominent. And I think you're absolutely right. There's been a lot of pent-up demand over the last year, where you had buyers ready to go with their 5% deposit and just couldn't get a mortgage because lenders weren't offering them. So it's great to see the deals back. There's lots of people that are interested in them, and there is a really genuine appetite to lend on these deals from mortgage lenders. You've got some really good rates coming out. Lenders are quite aggressively pricing them and tend to be reducing them rather than increasing them as time goes on. So again, that just has a snowball effect, really. As the rates come down, it's going to start attracting more and more buyers. So yeah, really, really exciting place to be at the moment, I think.
I think when you look at the sort of where we were last year in that edge of the market in terms of high loan to value products, it was just literally nothing out there, was there? And now you've got all these lenders kind of returning to that high LTV lending. And like you said, Tom, they're aggressively pricing as well. I mean, I looked at a few rates before I come on. You've got, I think it's Coventry at 3.35. You've got HSBC at 3.59. This is at 95% rates. I mean, those are aggressive rates looking for business. It's good.
So still very much in that money's never been cheaper to borrow kind of thing, regardless of what you've got to put down. start with.
Absolutely.
I get the feeling that the theme that we're going to be talking about a lot today is going to be about those high LTV lending and how lenders are adapting, but also about rate cuts. We both get the emails from, all of the consumer sites that are telling us about all the rate cuts. And, only in the last week, we've got NatWest, Halifax, Nationwide, Mortgage Works, Virgin, HSBC, all of them just cutting rates. Some of them by a little bit, some of them by a lot, but it's just the rates are going down, down, down rather than up, up, up.
I mean, and how sustainable do you think that is? Are we going to get to a point? Obviously, we've got the stamp duty threshold in, a few days coming to an end. There's a lot of talk around house prices. I mean, we're all fairly confident that they're going to stay as buoyant as they are, regardless of the stamp duty relief. Do you think the same will be with mortgage rates?
I think the way that 90% rates are at the moment is they're still loaded or higher than where they were pre-coronavirus. So 90% rates are higher than where they were, and clearly 95% rates have to be higher than 90% rate.
Mm-hmm.
And I think as we sort of hopefully come to the end of coronavirus, reach the end of furlough, mortgage lenders aren't so worried about property prices falling, and we start to get more confidence in the property market as well, those rates will even out to where they were pre-coronavirus, and you'll have 90 to 95% rates dropping down even further. Right. So I think that will be a trend that keeps on going.
I think you've got to remember, especially with the 95% rates, that a lot of them are backed by the guarantee scheme by the government. So whilst they've got that underpinning of support there, there's minimal risk for the lender compared to if they were fronting it just for themselves, if that makes sense.
Yeah, no, completely.
And that's obviously something that's going to stimulate, the market, because more lenders are going to be drawn to that LTV bracket with competitive pricing, which only helps the consumer.
Yeah, no, that makes perfect sense. And are you actually, are you physically finding a lot of people taking advantage of that, or are you seeing a lot more kind of buy-to-let people in the market at the moment? What's your your average client rate and stuff?
So I think a lot of first-time buyers are looking. It tends to be the 5, 10, maybe 15% at a push bracket that are our main clients that we seem to be doing at the moment. Where, as we said, people have just got this money. They've been desperate to buy for the last 12 months, and they've just been unable to do it because they haven't got the mortgage appetite from lenders to lend. So it tends to be the 5, 10, 15, which is, what we're good at.
Well, I guess we've just had a question come in from Ian actually as well, which sort of leads in quite well. Do you think the banks will ease up a little on buy-to-let mortgage lending criteria over the rest of the year?
Good question. Criteria-wise, I'm not quite as sure. Rate-wise, they're still competitive. Again, I noticed when I was looking at rates before joining that I think the Mortgage Works as again slashed rates. Yeah, so they've got 2 years and 5-year fixed deals here. If you've got a 25% deposit, which is generally the go-to deposit for a buy-to-let application as a minimum, they've got rates below 2%. I mean, you're looking at 1.99%. So in terms of aggressive pricing, absolutely, the buy-to-let lenders are aggressively pricing. Criteria-wise, not so sure. Tom, any thoughts on it?
I think the main thing that could possibly change is regarding the rent that's required for certain mortgages. So just to give you a background, how buy-to-let mortgage affordability is calculated is rather than personal income, it's based on the rental income of the property. And lenders have a weird and wonderful calculation that they use in the background to work out how much rent you need versus the mortgage size that you're getting. And that has changed recently because of tax changes in the market to how much you can offset against the profit. And Coventry Building Society last year reduced the amount of rent that they need for certain products to make it easier to obtain a larger buy-to-let mortgage with them. And as things like that do happen, mortgage lenders tend to follow suit, because if they're getting business that someone else is getting because of that, then another lender will want a piece of the pie, and they might in turn reduce their stress test in order to get some of the business that they were missing out on. So I think that's an area that could change in lenders reducing the amount of rent that they need for buy-to-lets, with perhaps not so much about the criteria itself.
I think what you generally find, though, is that in that part of the buy-to-let market, the mortgage lenders that are kind of specifically saying we're going to appeal to the landlord, the landlord that knows what they're doing, so to speak, what you'll generally find is they're smaller lenders. So the rates might not be as attractive, but the criteria is more flexible. So it's kind of that trade-off of trying to make the calculation fit, as well as actually the criteria of the buyer and what they're looking to do with the property.
So it kind of helps the buyer actually get what they want. Rates kind of secondary to that almost.
Yeah, I mean, Tom, correct me if you disagree, but whenever we're looking to actually place a case, you always start with the rate, clearly, because you want to get the best rate for your customer. Who wouldn't? But you do find yourself having to work down the list a little bit and go, right, it doesn't fit on the rental, it doesn't fit because they don't own their own property, or, you know, they're a first-time landlord, and you have to chip away at some of those headline rates until you reach a bit further down that says they're going to do the whole situation. Because
buy-to-let mortgages are complicated. There's probably more criteria, well, definitely more criteria that you need to fit on a buy-to-let as opposed to residential. So it's often not a case of, right, lender X has got the best rate, we'll put the mortgage with them. It's a case of, like you say, working down the list and finding maybe a lender at number 6 or 7 or 8 that will have the best deal because they also fit the criteria.
Excellent. Okay. Oh, and Sanjay just joined us as well. So back to, I guess, what you guys are seeing in the here and now. Are you, other than, you know, trying to get things through quickly, I think the end of June is now past us, figuratively. So are you seeing any other kind of recurring difficulties coming up, or sort of things that you're seeing time and time again?
I think the main difficulty over the last 12 months has been for self-employed people. There's been a lot of articles here, there, and everywhere that say, you know, mortgage lending has ceased to self-employed, which is clearly not true. But mortgage lending to self-employed was hit hard because of coronavirus. And instead of a mortgage lender just simply relying on your tax calculations like they would pre-coronavirus, they're now normally asking for your latest 3 months business bank statements to show that the income coming in currently is the income that you would normally be expecting. So we want to make sure that your income hasn't dipped, it hasn't stopped, because, you know, verifying income for self-employed applicants is difficult because sometimes the lender's using a tax calculation that's 12 months old. So they want to make sure that the income you're receiving into your bank account is actually reflective of the income that you're basing the mortgage against. So I think that's the biggest thing I would say for self-employed is your lender will almost definitely ask for your latest 3 months business bank statements. Just have a look through them. And look, if you're telling the lender, based on your tax calculation, you earn £50,000 a year and you've only got £2,000 a month currently coming into the business, then they're probably going to ask questions and say, hold on, you know, what's happened here? But as long as your bank statements reflect the income that your tax returns show, then we should be okay.
Okay. An interesting one here that's just come in. People still on furlough, and has that been an issue for people mortgage wise and lending?
Yeah, so when furlough first kicked in, probably maybe 13, 14, 15 months ago, mortgage lenders initially said, you know, okay, yeah, we'll lend to people on furlough. As we got towards the end of last year, it almost went to the other direction, and mortgage lenders almost stopped as a whole lending to people on furlough. Now we're in a position where I would say 9 out of 10 lenders will not lend to anyone on furlough without a return date. So at a minimum, probably you'll need a return date with a letter from your employer.
Okay.
And most lenders will actually need you to evidence that you've returned via either your latest payslip or a letter from your employer to say such and such return to work on this date.
Fair enough. And then one for you, Adam. We were talking about this only last week or so. Properties with low leases. I've just done a blog on this actually as well, following our chat of how low is too low, and, you know, should people really be getting scared? You know, is there you know, leases when they're dropping below 100, you know, up to 70 years, is it still easy enough to get lending on them? Are people struggling?
Yeah, absolutely. I mean, lenders look at, and Tom, chip in with any help here at all, but you're looking at what the lease is at the start, so when the person's looking to buy the property, as well as what the lease is going to be at the end of that term that customer's taking. So if they're taking a 25-year term, for example, or a 35-year term, the lease remaining at the time of the end of that mortgage is going to be different. But as long as there's a sensible amount left, I think most lenders will do.
Sensible amount?
Yeah, so different lender to lender. Santander, for example, will lend if the property's got a 55-year lease with 30 years at the end. So if you're buying a property with a 56-year lease and you're taking a 25-year mortgage term, then some lenders will be okay with that. So it really does depend lender to lender, but certainly under 100 years, 90, 95 years, absolutely no problem as far as most of the major banks are concerned.
I find that customers generally start to ask when it's below 100 years. That's when kind of they'll say, well, I've got X number of years left on the lease. Is it going to be okay? And like I said, until you start going below sort of 60 years, then most lenders are going to be fine with it.
Well, I've done an interesting blog on that following our chat, so I'll put the link to that in the comments as well, if anyone wants to have a read through, which is good. There's a fair amount of leasehold and flats and stuff hanging around, so should help make people's buying decisions easier.
Yeah,
cool.
Great.
Well, I guess last little quick fire question for both of you then. Best piece of advice at the moment for first-time buyers? What do you reckon?
Good question. I'll add my 2 cents worth.
For first-time buyers?
Yeah.
I would say if you're a first-time buyer out in that market, it's still a really, really hot market. I think I read 16 buyers for every one property statistically the other day. If I'm a first-time buyer, you want to be as prepared as possible and put yourself in the shoes of the seller and the selling agent. So what makes you an attractive buyer? Being prepared with, your broker, your lender, your agreement in principle, whatever route you've taken, being prepared with the solicitor that you're likely going to use as well, at least having an idea of who that might be, having made contact with them, have your documentation ready. Again, if you've spoken to a broker, they're probably going to have prepared you on what you need. And then when you're making that offer, laying those cards on the table, explaining your position and why you are the best buyer. You'll hate me saying this, Ellen, but hopefully you agree. It's not always the highest price that's the best offer. It's the best overall profile, right? Because you can give the highest price, but if you can't proceed on the property, you're no good. So it's about putting yourself in the shoes of the selling agent, and making yourself as attractive as possible. This is a people business. It's property, obviously, but you're dealing with people. So making yourself likable is going to be helpful.
Yeah, makes sense. Tom?
I would pick up on documents, and I do a lot of mortgages for first-time buyers where they're renting, and I get their bank statements and they're in their parents' address. I get the pay slips, they're in a different address, and they're saying they actually live at another address. And if you're a mortgage lender, that's an absolute nightmare. You got someone telling you that they live somewhere and they've got addresses all over the place on all their different documents. And I get it. It's no fun changing bank statements and pay slips over, especially if you're, changing addresses every 6 or 12 months because you're hopping about rental properties. But if you're looking to apply for a mortgage, take 15, 20 minutes, life admin, change all your addresses over on all your statements, your driving license, your council tax, get put on the electoral roll at your current address. Mortgage lenders absolutely love being on the electoral roll. And if you can get all your documents lined up so the story that you're telling the mortgage lender makes sense, your mortgage application is going to go a heck of a lot smoother than if you've got addresses dotted about here, there, and everywhere.
Yeah, perfect. So just in case, get all your ducks in a row first, really. Something from you guys. Great. Okay. Well, is there anything else that you two wanted to ask me?
Where's the pink hoodie?
It's a bit warm today, so we've got the t-shirt on instead.
Yeah. Okay.
Nice.
Yeah. Still. Yeah.
That was it. That's all I've got.
Love it. Excellent. All right. Well, thank you both for your time. And we'll try and get this booked in, I think, mid-monthly, every month moving forwards.
Yeah, that was great. Thanks for having us, Ellen.
Adios.
See you
next time.